Medical-related expenses are a fact of life. Whether you visit a doctor's office, purchase prescription medicines, or wear glasses, everyone has medical expenses. And families with young children know all too well the high cost of daycare. These expenses take a real bite out of your salary. Fortunately, your employer is offering you a way to pay for these expenses tax-free that will dramatically increase your take-home pay. It's called FlexSystem, and it can save you between 25% and 40% on these necessary expenses. How does FlexSystem save you money? Let's look at this in terms of just $1. When you earn $1 at your company, you actually take home around 60 to 70 cents. Where does the rest of your pay go? Well, 15% or more pays your federal taxes, and another 5 to 7% are for state taxes, depending on the state. Finally, you pay 7.5% for Social Security and Medicare taxes. After taxes are taken out of that $1, you take home about 70 cents or less. That's why FlexSystem is so important. It's one of the few legal ways you can take a full dollar, set it outside of payroll, and receive a full dollar worth of buying power. Look at this comparison. Without FlexSystem, you are taxed on your full salary before you pay for medical and dependent care expenses. This reduces your take-home pay. With FlexSystem in place, the money to pay for your medical and dependent care expenses is taken out of your pay before you are taxed, lowering your taxable income significantly. Because you are taxed on less, you pay less in taxes and take home more money, a lot more money. The choice is yours. You can give Uncle Sam 30 cents out of every dollar you earn and then walk into Target or Walgreens to buy your prescriptions. Or you can put that dollar into FlexSystem and have a full dollar to spend. Now imagine you pre-taxed $100. That's roughly $30 in savings. How about pre-taxing $1,000? That's $300 in savings, and that's big. FlexSystem Flexible Spending Account funds may only be used for eligible health care and daycare expenses. Eligible expenses include medical care services, dental care services, prescriptions, certain over-the-counter supplies, vision and dependent care expenses. Some of the more common eligible medical expenses include co-pays for primary care appointments, specialist treatments, emergency room visits, physical therapy, and chiropractic care. It also includes deductibles and prescription co-pays, regardless of the type. And this includes eligible expenses incurred by you and your dependents. Even if your spouse works for a different company, he or she can still use your account for their expenses. You can find a complete list of eligible and non-eligible expenses by visiting irs.gov and searching for Publication 502. Here's how FlexSystem works. You elect the amount of money you will spend throughout the year to pay for your family's eligible expenses. That amount is deducted from your salary and sent to FlexSystem. FlexSystem holds the money in a secure account until you incur eligible expenses. At that point, you request reimbursement from FlexSystem and submit substantiation documentation. After we receive the request and substantiation, FlexSystem sends you reimbursement. And the total amount of your annual medical election is available for reimbursement from the first day of the plan year. Your request for reimbursement can be made in a number of ways: online, by fax, by mail, by text, or through your Task mobile app. In addition, with the innovative Task Card, you can pay for eligible expenses and be reimbursed right at the point of purchase. In most instances, when using the Task Card, your purchases are automatically substantiated and deducted from your FlexSystem balance. This is the fastest reimbursement method possible. For For the times when you don't or can't use the task card, you'll receive reimbursement in the cash account on your task card called MyCash. With MyCash, your reimbursement money is loaded onto your card, but in a separate account that you can spend anywhere and in any way you wish. You can also elect to receive your reimbursements through direct deposit through a bank account of your choice. Unused funds left in your account at the end of the plan year are not returned to you. This is referred to as the use it or lose it rule. You're urged to track your account balance on the MyTask website, the Task mobile app, and our interactive voice response system to avoid having funds remaining in your account at year end. Fortunately, there are two ways to significantly lessen the use it or lose it risk. The first method is a provision in the law that allows participants in health flexible spending accounts to carry over up to $500 from one plan year to the next. The other method is through the grace period. The grace period allows you to incur eligible expenses and request reimbursements for up to 75 days after the end of the plan year. The actual length of the grace period and whether or not it is available to you is determined by your employer. The only catch to these two methods for reducing the use it or lose it risk is that you have to choose between the two. If you prefer the grace period, you cannot also add the carryover feature. Conversely, if you prefer the carryover, you cannot also use the grace period. Check with your employer to determine which option is available to you. The other item you should be aware of involves changing elections during the plan year. You may change your account elections during the plan year only if you experience a change of status, such as a marriage or divorce, birth or adoption of a child, or a change in employment status. Refer to the change of election form, which is available from your employer, for a complete list of circumstances acceptable for mid-year election changes. Tell your employer now that you want to sign up for FlexSystem today. Your employer or Human Resources Department will help you complete the enrollment process. Contact FlexSystem at 1-800-422-4661 or at taskonline.com for additional assistance.